A wire fraud advisory is a document or communication aimed at informing clients and real estate professionals about the risks of wire fraud during real estate transactions. Wire fraud is a form of cybercrime where criminals impersonate legitimate parties, like title companies, escrow officers, or lenders, to send fake wire transfer instructions to unsuspecting buyers or sellers, often resulting in the loss of large sums of money. The advisory typically includes overview of wire fraud, an explanation of how wire fraud works, including how cybercriminals intercept or trick clients into transferring funds to fraudulent accounts. It also emphasizes the increasing sophistication of these scams, warning signs and red flags, unexpected or last-minute changes in wire instructions, unsolicited emails or communications claiming to be from legitimate parties, requests for wire transfers to non-traditional or personal accounts, emails or messages from addresses that closely resemble but aren't exactly the same as the legitimate sender's domain, e.g., titlecompany1@gmail.com instead of titlecompanyofficialdomain.com. Best practices for verification. Always confirm wire instructions directly by phone using a known trusted number, not the one in the email or message. Use secure communication channels, e.g., encrypted email or secure video calls, to confirm financial details. Do not rely on email as the sole method of confirming wire instructions. Steps to take if you suspect wire fraud. Immediately contact your agent, the escrow officer, or the title company using known contact information. Notify your bank or financial institution to try to stop or reverse the transaction if it hasn't been completed yet. Report the fraud to local authorities or federal agencies like the FBI's Internet Crime Complaint Center, IC3. Additional security tips. Use a VPN when accessing transaction platforms or emails over public Wi-Fi. Enable two-factor authentication, 2FA, to protect accounts. Be cautious when handling sensitive information online, particularly during crucial stages like closing a sale. The goal of the Wire Fraud Advisory is to raise awareness about the risks of wire fraud and provide clients with the tools and knowledge to protect themselves from these scams, ensuring that they can safely transfer funds during real estate transactions. Presenting the Wire Fraud Advisory to clients is a critical part of ensuring their security during a real estate transaction. Here's a breakdown of when and how to present the advisory. When to present the wire fraud advisory. At the initial meeting or consultation. Why? Early education helps set expectations and prepares clients for potential risks. How? Introduce the concept of wire fraud as part of the discussion on general security protocols for the transaction. Mention that you will provide a formal wire fraud advisory later, but make them aware from the outset that this is an ongoing risk. Before sending any wire instructions. Why? The risk of fraud increases when the client is getting ready to send or receive funds. This is a crucial time to ensure they're vigilant. How? When it comes time to discuss payment instructions, i.e., escrow deposits, closing costs. Reiterate the importance of verifying wire instructions directly with the trusted party, e.g., escrow officer, title company, lender, after receiving the official closing documents. Why? This is typically when clients will be receiving wire instructions for the final transaction. Presenting the advisory here gives them a chance to verify wire instructions right before the transaction occurs. How? Provide the advisory as part of the closing package, ensuring clients review it before making any transactions. During key transaction milestones, e.g., escrow opening, inspection completion, contract acceptance. Why? These are points where the transaction is moving forward, and the client may begin receiving emails or communication related to wire transfers. How? Send the advisory or review it with clients during these milestones as a reminder of the ongoing risks. How to present the wire fraud advisory. In writing, email, or physical copy, provide the advisory in a clear, written format, so clients can refer to it later. This could be done through email as part of your transaction paperwork or handed to them during face-to-face meetings. Tip: use bullet points or a checklist format to make it easy for clients to digest key points, e.g., verify wire instructions, contact through trusted numbers, etc. Verbally. During meetings or calls. Why? A personal explanation helps to ensure the client understands the importance of the advisory. How? Briefly discuss wire fraud risks at key moments during the transaction, e.g., when you first introduce the advisory, during a meeting before the closing, or before sending wire instructions. Emphasize the need for careful verification of wire instructions and explain how fraudsters operate, making the advisory feel relevant to them. As part of transaction checklists. Why? Including wire fraud education as part of a checklist helps ensure the client is following the necessary steps for secure transactions. How? Include a reminder or step in the transaction checklist about verifying wire instructions and reviewing the wire fraud advisory, using infographics or visual aids. Why? Visuals make it easier for clients to understand and retain critical information about how fraud might occur and how they can protect themselves. How? Attach infographics in the advisory materials that visually highlight potential warning signs and steps for confirming wire instructions. Regular follow-ups. Why? Clients may forget or overlook the advisory, especially if the transaction spans several weeks. How? Send a reminder email or touch base by phone to ensure the client is following the verification procedures, especially if the transaction is approaching a critical stage like closing. By presenting the wire fraud advisory at key points during the transaction and in a clear, understandable format, you help ensure that your clients are informed and prepared to avoid these dangerous scams. Limiting liability through documentation and education is crucial in real estate transactions, especially when it comes to wire fraud and other cybersecurity risks. By proactively educating clients, providing clear documentation, and ensuring that all parties are aware of the potential risks and proper procedures, you can significantly reduce your exposure to liability. Here's how this approach works. Clear documentation helps create a record of due diligence wire fraud advisory. Providing a documented wire fraud advisory ensures that clients are informed about the risks involved and know how to verify wire instructions. By giving clients written materials or checklists that outline the steps to protect themselves, you create a record that the client was informed about the issue and provided with the necessary precautions. Limiting liability. If fraud does occur, having this documentation shows that you took appropriate steps to educate your client about the risks. This can protect you from claims that you failed to inform them or that you were negligent in your duties. Client acknowledgement. Have clients sign an acknowledgement form that confirms they've received and understood the wire fraud advisory. This documentation can be critical in protecting you from future claims. Limiting liability. A signed acknowledgement serves as proof that the client was aware of the risks and the necessary precautions to take. If a fraud incident occurs, you can refer back to the signed document to demonstrate that you followed best practices and communicated the necessary information. Education helps clients make informed decisions. Proactive communication. Regularly educating clients on wire fraud, how it works, and how to verify information reduces the likelihood of them falling victim to scams. This may include discussing why they should never trust unsolicited wire instructions, how to directly verify wire instructions using a trusted phone number or method, the importance of checking the legitimacy of email addresses or phone numbers. Limiting liability. By providing thorough education, you're empowering clients to make informed decisions. If a client follows your advice and remains vigilant but still falls victim to fraud, you can demonstrate that you took every reasonable step to educate and protect them. This can limit or even eliminate your liability for the incident. Reduces ambiguity in the transaction process. Clear communication of security procedures. establishing clear procedures for verifying wire instructions, e.g., contacting the title company via a known phone number, and ensuring clients know exactly what to expect reduces ambiguity and confusion. Limiting liability. When both you and your clients follow a defined process, it becomes clear what actions were taken and what steps were missed in case of fraud. Clear, consistent communication and documented procedures can shield you from claims of negligence or failure to act in good faith. Demonstrates your professionalism and due care. Best practices in cybersecurity. Educating clients about using secure networks, complex passwords, two-factor authentication, and avoiding public Wi-Fi adds an additional layer of due diligence in the process. Clients are less likely to experience fraud when they follow these practices, and they're more likely to appreciate the care you're taking to ensure their security. Limiting liability. By following industry best practices and educating clients on them, you demonstrate that you've taken reasonable steps to protect your clients' interests. In the event of fraud, this shows that you were proactive and professional, helping to limit liability. Helps mitigate the risk of fraud incidents. Educating clients on red flags. By educating your clients on how to spot phishing attempts, fraudulent emails, and other scam tactics, you are directly reducing the chances that they will fall victim to fraud. This may include highlighting how fraudsters use fake email addresses or unexpected changes in wire instructions. Showing clients how to look out for suspicious activity and how to respond, e.g., calling a known phone number to confirm instructions. Limiting liability. If a client falls for a scam despite your best efforts, you can point to your education and documentation efforts as proof that you took reasonable steps to prevent it. This can help reduce the likelihood of a lawsuit or claim against you. Consistent follow-up and verification processes. Reinforcement through follow-up. Constantly reinforcing education and providing periodic reminders throughout the transaction, e.g., before sending money at key milestones, shows that you were actively ensuring your client followed the correct procedures. Limiting liability. When a fraud incident occurs, it can be helpful to show that you repeatedly communicated the steps the client needed to take, and that they were given multiple opportunities to verify wire instructions. This can limit your liability by demonstrating that you were diligent and proactive. Conclusion. By implementing a strategy that combines documentation and education, you protect yourself by creating a paper trail that shows you took the necessary steps to inform your clients about wire fraud risks and the appropriate ways to mitigate those risks. This not only helps protect your clients, but also reduces your risk of liability in case of a fraud incident. The key is clear communication, thorough documentation, and a consistent, proactive approach throughout the transaction. Relevant Arizona Commissioner's Rules that support wire fraud advisories, AAC, R4 28 1101. Duties to client key point. Licensees must protect and promote the client's interests and deal honestly with all parties. Connection to wire fraud advisory. Informing clients about wire fraud risks and providing a formal advisory demonstrates that you're acting in their best interest and exercising due care. Critical under this rule. AAC, R4 28 1101B. Disclosure of material facts. Key point. Licensees must disclose all material facts that a reasonable person would consider important in making decisions. Connection to wire fraud advisory. Wire fraud risk, especially during closings involving large financial transfers, is a material fact. Not warning clients about this could be seen as a failure to disclose. AAC R4 28 1101F. Competency. Key point. A licensee must be competent in the performance of their duties. Connection to wire fraud advisory. Staying informed about current threats, like wire fraud, and educating clients is part of being a competent, responsible professional. AAC R4 28 1101H. Reasonable care. Key point. A licensee shall exercise reasonable care in the performance of duties. Connection to wire fraud advisory. Providing a wire fraud advisory shows reasonable care by helping clients avoid preventable financial harm. Summary. While the Commissioner's rules don't require a specific form like the wire fraud advisory, best practices under the rules strongly support its use. Providing the advisory can demonstrate compliance with fiduciary duties, show good faith and reasonable care, help reduce your liability if fraud occurs. While Arizona real estate brokers are not legally mandated to use a specific wire fraud advisory form, they are strongly encouraged to implement policies and procedures that address wire fraud prevention. This guidance is provided by the Arizona Department of Real Estate, ADRA, and the Arizona Association of Realtors, AAR, to help brokers protect their clients and reduce liability risks. Broker responsibilities. Regarding wire fraud advisories, establish office policies on cybersecurity and wire fraud. The ADRI's model. Broker's Policy and Procedures Manual recommends that brokers develop internal policies addressing cybersecurity, best practices, prevention of wire fraud, reporting procedures for cybercrime. These policies aim to safeguard business transaction files and client information. Utilize the AAR Wire Fraud Advisory. The Arizona Association of Realtors, AAR, provides a standardized wire fraud advisory form designed to educate clients about the risks of wire fraud and the importance of verifying wire instructions. Brokers are encouraged to present this advisory to clients at key points during the transaction process. Seek professional guidance. Brokers are advised to consult with insurance professionals regarding cyber fraud insurance coverage and to seek legal counsel when establishing office policies related to cybersecurity and wire fraud. Summary. While not legally required, implementing wire fraud advisories and establishing comprehensive cybersecurity policies are considered best practices for Arizona real estate brokers. These measures demonstrate due diligence, enhance client protection, and help mitigate potential liability in the event of a cybercrime incident